Welcome to Bears in Exile. Today is January 8th, a Tuesday, and this is it's not the market overview. This is just a quick hit on the Dow, SPX, COMPQ, and TNA. Just a quick hit. Starting off with the Dow, make it really fast. There was something in the daily running thread about what we should be looking for as far as going down, going up, etc., etc. I am still bullish on the market, even though it looks like we're starting to get good confluence for a downside move. Everybody is talking about, oh, we got to go down, oh, we got to go down, and I am just not there at the moment. But here we are with the Dow. This is going to be the crappiest one for what I'm pointing out. Today it did get a downtick. The downtick does give it a target of just above 13,250. And my thesis for this is going to be, you're going to see on the other things, that we have this downtick target, we know what it is, and that it doesn't penetrate too far into the recent high. Now on the Dow, it just doesn't really pan out. The Dow did get slammed harder thanks to stinking Boeing and their fire on the plane, so this may actually be skewed. And so that might be reading too much into this. Where it is at the moment is, at least it's, actually it's piercing that too. Not the recent high, but the level just under that. I'm hoping that we will not close below that point, and a tail going below it is just fine. But this is deceiving, so I'm going to move on. SPX, this is the second worst chart for my thesis, but it's not too bad. We did get a downtick today. What I was saying in the daily running thread is the downtick targets are such that even if they are met, they are not going to either take out the recent high or not take it out by very much, in which case it would just be essentially a tail going into it, and that is not overly bad. With our downtick today on SPX, we're looking at 1441, and that actually is a little bit lower than I would like, but it is what it is. Can't bend these to make it look like something else. But we still have not hit the previous high, unlike the Dow. So that in itself is positive. And beyond that, we have the other level just underneath it. So two levels of relative comfort, and this downtick target is just barely below the second one. So until it gets to this point and below, I'm not going to worry about it. But we do have good confluence for a move down, at least in the daily time frame. The 60-minute doesn't look bad at all, but I don't want this video to take too much time. I'm going to go on to COMPQ, the NASDAQ, and I don't know if you could really call this a downtick target or not, but if we do, it takes us right here to the top of the green candle from the previous top. So that's good. That's part of my thesis about even if we get a downtick move, a bubble corrective move, the things that are propelling this market are not going to break the line in the sand. So good confluence for the most part of for a move down in the daily time frame. Every other time frame looks pretty darn good. This has been consolidation, and after a big move up, consolidate, should have stair-step formation and go up once again. We're just waiting for that to happen, and hopefully it doesn't. We're not waiting for it to crap out, but even with a little bit of a move down, shouldn't be a problem. And moving on to TNA, this is the best one for the thesis. And I was hoping that we'd get one more day, semi-minorly up in most things, just so the bubble corrective target would not be inside of the resistance at the previous high. But here we are with TNA representing the Russell. We do not have a downtick in this. This has been massively strong, really incredible. And even if we had got one today, let's say that this had happened today, our downtick target is right here. Boom, right above 66. Nowhere near the previous high. So even if this had done a bubble corrective move, no problem whatsoever. And that's the thinking behind it. And just like everything else, good correlation for a possible down move. But even so, we could have a minor down move and no problem at all. And I don't think we're going to get it personally. I really don't think that we're going to get it, but we shall see. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. And I'm going to do the 60-minute, now that the video is essentially over. SPX, 60-minute time frame. What do we have? We have our consolidation. And we've already moved down a good ways on the 14-day RSI moving average. We have all of the secondaries rolling over to move to the upside with the exception of the MACD. So we just need a little bit more development. We can have a secondary reset to the top. At that point, we should have the 14-day RSI moving average at its bottom. So we'll have a movement up with some pressure to help contain it. And then we'll be aligned for movement up on the 14-day, move down on the secondaries, and then they can move together to finish their move up, which should break us well out of this consolidation box. And it should be similar on essentially everything else. And there you go for this evening. Thank you very much.